So we are on the ITC's daily chart. If you have watched my previous video, we discussed this trade where we went short, the positional trade where we went short on the close of this candle with a stop loss here and a 1:1 target somewhere here. Eventually the trade went into losses. The stop loss got triggered before the target and the price came back to the monthly resistance. So let us now go to the daily chart. Let us now go to the weekly chart to see what. Nice. In the weekly chart, we have a recent uptrend forming. You can see the price is making higher lows and higher highs, but the predominant trend is bearish. Let us go to the monthly. So the bearishness is coming from the monthly where the price has broken below the 50 EMA. Remember always that when the price breaks below the 50 EMA in the monthly chart, it is a strong signal of bearishness, weakness. So the price has broken below this 50 EMA, made a kind of a pullback and is still at the 50 EMA. And the price is somewhere near the monthly resistance. So again we are seeing a bearish bias because recently the price has broken the 50 EMA. Let's go to the weekly. So in the weekly now we are seeing that there is a small candle rejecting the monthly resistance. This candle is also very near to the 50 EMA. Now this is not a strong signal of bearishness looking at the recent uptrend being formed. So what we are looking is a covering candle. If we get a covering candle, it would be very nice to support our bearishness that the price is indeed willing to go down. Let us move forward. So on the very next week, we got this good covering candle saying that the price is indeed going to go down. So what we will do is we can draw a trend line even here on the weekly time frame. So this trend line represents the recent uptrend in the weekly. The price has not yet broken below the trend line to give us a clear bearish picture. Although we have a good covering candle, the bias is already bearish. One can enter short here, but anyways, I personally would wait. I would wait for more confirmation. Let me go to the daily chart. Now in the daily chart, we are seeing that the price has broken below the 50 EMA, which is a nice signal. If you look at the line chart, we are seeing that the price is making a lower high and lower lows, signaling a downtrend has started. So the daily is bearish. We can enter short on this candle with a stop loss somewhere here or probably here and take a trade, a positional trade, not an issue. Why? Because there are many factors, many indications of bearishness from all the time frames. So we can enter short, but I personally would like to wait. Let me see how it plays out. Yes, now I like this candle very much because this candle broke the weekly trend line. So I can go short here. With a stop loss somewhere here. We will not be aiming for a wide stop loss like here. It would be too much. It would be an 8% move, which is very long duration. What we'll do is, since we have waited very much, we have been patient and made this a high probability trade. We have confirmed that bearishness is existing everywhere, so this trade can be taken with a little narrow stop loss somewhere here, just above the 50 EMA, and we can go for a 1:1. Let us see. And we get our target. Now some traders like to trade the pullbacks. What I mean is, they will not enter right at the close of this candle. What they will do is, they will like to wait they want the momentum to be low. They want the volatility to be low. They want a pullback. So what they will do is they will still wait. Even after getting this big red bodied candle, they will wait. And if we see the next candle, that is this candle now. This is a good candle. It has rejected 50 EMA almost by a small margin. It has also rejected the weekly trend line. This is a good RC. We can enter short here also. Again, this candle, we can see that the squeezing candle formations, the bodies are getting smaller. This candle is a small bodied candle. After this candle, we see that the price has given a covering candle. Now again, this is a good sign of weakness. One can enter short here and look for a move. So there are many variations possible. You have to identify what is working for you, what you are liking, what you are comfortable with. Now let us say that you are a strict intraday player. So you must be waiting for the weekly trend line to be broken on the intraday time frames. The daily is already bearish. Okay, so let me come back in time to this bar. Yes, so we are here on the daily chart. The daily chart appears like this. We will go to the intraday chart, the 15 minutes. We are seeing that the price is in a nice downtrend. This is acting as a good area of support. Now you are seeing that the support lines up perfectly with the weekly trend line. So break below this can trigger a potential good entry. Let us see what happens next. We get this big candle. Immediately we will decide to go short because this is a good big red candle. We will set the stop loss just above the high and go for 1:1. Just a minute. Yes. Now let us see what happens. Do we get our target or do we get taken out? And our stop loss is hit. We see that the stop loss is hit. The intraday trade failed. Let us go to the daily now to see. In the daily we have this candle. So the daily is still showing bearishness. We are again looking for a break of the weekly trend line on the intraday time frame. So we will again go to the 15 minutes. Let me just play this. If we again get any break, let us delete this. Yes. We have a amp top formation here, you can clearly see, and with this candle the price breaks below the trend line, breaks below the 75 minutes, breaks below the 15 minutes support. So there are two confirmations here. The first is the break of the weekly trend line and the second confirmation is the break of this 15 minutes support, and also we have an amp top. So this makes up for a good intraday trade again. We will try to go short here at the close of this candle with a tight stop loss somewhere here. And a quick 1:1 target. Let us see, do we get it? Now let us see. Yes, and this time we have our targets. So what we learned is the first time it was a fake breakdown below these areas, below this trend line and the support. It was a fake breakout which the price couldn't sustain and it came back up. Then it came back up to form an amp top, the break of the 50 minutes EMA, 50 period EMA, and then the break of this trend line, the break of this support, and a clear cut candle below these areas, it is when we decide to go short on the intraday time frame and we get our targets nicely. Let us go to the 75 minutes time frame to see if any swing trade presented itself. So in the 75 minutes we had this beautiful rising wedge pattern. A beautiful rising wedge pattern which got broken with this candle, but this was not a confirmed breakdown. We waited, we should wait, and we should wait for this bar to see that the price is clearly below this pattern. So within these 3 bars we can take a short entry with a tight stop loss, with a tight stop loss just above this candle and a 1:1 target. So in the 75 minutes too, the target is achieved. Let me just show you to avoid confusion. Let us say that we are somewhere here. Let us go to the daily now to understand. Yes. Now if you remember, this was the trade failure which we discussed in the last video. The price broke below this trend line and could not reach our target, which was somewhere at this level, but went up back to take our stop loss and we booked loss. Now once again the price was at this level, which is what we were discussing in this video. The price approached this level of monthly resistance. So now at this point, if you are a swing trader, you will go to the 75 minutes time frame. Now what do you see in the 75 minutes time frame? You see that we have a good rising wedge pattern. So what we will do is we will be waiting for a pattern breakdown. We will play this. And we have a good breakdown with this candle, and this candle gives us a clear breakdown. The open and close both is below this below this lower borderline. So the breakdown is confirmed with this candle. We can enter short right here with a stop loss somewhere here or above this candle, whatever you prefer. 1:1 target. And we see that the target is achieved within 5 to 6 candles. In this particular example, the 75 minutes time frame was beautiful because we saw a rising wedge pattern along with the time frame's conflux. So the pattern breakdown was a good confirmation of the downtrend. I understand that as a beginner you must be finding difficulty in understanding different time frames. When I am switching between the time frames, you must be finding difficulty, I understand. When I started off, I too faced difficulties. So it is nothing new. Be persistent, be disciplined enough, make sure you practice. I want you to open up charts and look for good price action in the weekly. Start from the weekly chart. Whenever the price approaches an important area of support or resistance, start observing the chart. Look if it has formed a rejecting candle, if you see the squeezing candles, or if you see any other good price action. Once you establish a bias, a view from the weekly, go to the monthly chart. Look for what the monthly is saying, whether it is confirming your view or whether it is going against your view. Note it down, then go to the daily chart. In the daily, do the same thing again. Look what the chart is saying, whether the price is recently in an uptrend or a downtrend. Are there any patterns which are forming? Draw trend lines, draw supports, resistances. If you are a swing player, go to the 75 minutes also, because in the 75 minutes there are high chances that you will find patterns. Observe those patterns. When the price breaks below this pattern, observe what happens. Just assume that you make a trade and see if the trade hits your target or your stop loss. I want you to do this at least 30 times. What it means is you need to identify 30 examples of good trades. Start off with the weekly chart. Start noting the chart when the price in the weekly time frame is approaching an important area. Then go to the monthly, then go to the daily, then go to the 75 minutes and try to bring each time frame to tell you the same thing before entering a trade. You will be surprised to see the accuracy. When all the time frames tell you the same thing, when you have the conflux, multiple things telling you the same thing, your accuracy will be beautiful. It will be very high. So start practicing now. Now I know very much that I have taught you many things like when to exit, when to enter the trade, how to set your stop loss, and there are many alternatives of doing the same things. So you may think that it is quite confusing. You are looking for something very rigid, something very strict. But as I had promised, I will be teaching you a discretionary method. You will have your own judgment. You will not be dependent on anybody. You will not have any predetermined rules. Markets follow nobody. Markets does what it wants to do. It is you who have to make your own decision. So that is why I am not giving you any strict rules. In fact, I too do not follow any strict rules. I just try to use my own judgment to decide where my stop loss is, where my entry is, and I always aim for minimum 1:1 risk reward ratio. That is the bare minimum, right? So never compromise on the risk reward ratio. Keep it at least 1:1 on every trade, no matter what. So now start looking at charts. At least 30 examples you should come across. You will be surprised to see that everything is very easy. You just need to practice and apply your own judgment. Thanks for watching. Goodbye.